We were not spared the impact of COVID in the last quarter of our financial year ended 31st March 2020. However, it has been less than some commentators have predicted, as our portfolio has again proven its resilience. Our preliminary net portfolio value as at 31st March this year was 306 billion Singapore dollars. For context, while marginally lower than the previous year, that's up threefold in the past 16 years. Our one-year total shareholder return was minus 2.3%. However, our long-term performance measures remain relatively stable with annualized returns of 14% since inception in 1974. The end of our financial year coincided with the worst of the market dislocation during the onset of COVID. The markets bottomed on 23rd of March. Up until the end of January, our portfolio value had trended well. However, the market value of our listed assets has risen since the end of March. We ended the year in a net cash position with a strong balance sheet. This positions us well to ride through the tough times, to position our companies for future growth, and in other opportunities that may present themselves. We've been working hard over the years to build a portfolio that is more resilient to shocks, investing to good quality companies with strong fundamentals. In particular, our unlisted investments, which are recorded at book value, adjusted for impairment, have provided good returns. In addition, our more recent investments, guided by our themes and trends, have also performed well given the wider economic conditions. We don't measure ourselves against public market indices because our portfolio is made up differently. However, they provide some color as to relative performance. During past crises such as the GFC and SARS, Temasek has outperformed the market indices. The performance of our portfolio this last financial year continues this trend. At Temasek, we invest for the long term. We accept that being an investor in equities means higher year-to-year volatility and the risk of negative returns. This is balanced by an expectation of higher returns over the long term. We don't manage our portfolio to short-term changes in market value because we're not trading our assets over short horizons. Instead, we focus on key structural trends like sustainable living and longer lifespans and seek to deliver sustainable returns over the long term. At Temasek, we have roles that go beyond delivering sustainable returns. We strive to be a forward-looking, responsible investor, focused on doing right and doing good for our communities, whether in good times or tough times, to deliver sustainable value over the long term. Looking ahead, the new COVID normal will be even more complex. A lower returns environment, geopolitics and strategic rivalries, and the pandemic will create even more uncertainties for investors. The market rebound we've seen in recent weeks should be viewed with caution, as the emergence of second waves of infection has forced a return to lockdowns in some places. Markets may well resume their volatile behavior. We will look for investments that are aligned with the long-term structural trends that we have identified. We're working with our companies to transform even during these times, so they build their resilience and emerge from the downturn in a strong position to grow. And beyond investing, we are working across new and innovative fields that will seed new investment opportunities and platforms for growth. For instance, we recently concluded a partnership with the Monetary Authority of Singapore to trial a blockchain-based multi-currency payments platform involving more than 40 companies. This paves the way for new commercial applications of blockchain technology.